I believe that the most vulnerable banks in the United States is where we will see the biggest risk and flight from deposits. And so if you didn't worry about community banks before, roll back to COVID, where we all got very sympathetic to where we were going to cut our hair and what restaurant we'd go into and whether our doctor was going to be local and there was a retail store that would serve us. Like magically, we became super sympathetic to our neighborhood. I worry greatly for the United States that community banks will start to fail across the United States if too rapidly and too greatly money comes out of the banking system. And so I would like to see some ability to stabilize or build product lines so that small banks can actually work cohesively with the stablecoin and digital asset space. Because another thing we can touch on that I greatly believe is that there really shouldn't be and won't be a differentiation between digital assets and non-digital assets. They will all be cohesive rails. You'll just choose one or the other.
This is Money Code. It's a show where we decode stablecoins and programmable money. I'm Chuk, your host and author of Stablecoin Blueprint, and I'm here with my co-host Parekh, head of stablecoins and payments at Monad. Today, we're joined by Jackie Reeses, chair and CEO of Lead Bank, and arguably the most important banker in stablecoins. Thanks for joining us, Jackie.
Oh, my pleasure.
And today we're going to be decoding the banking layer of stablecoin payments. Here's why you should care. Stablecoins don't work without the banking system. And right now, Lead Bank is the critical plumbing to the industry's biggest stablecoin payment players. Jackie took a Kansas City community bank and turned it into a fintech powerhouse. It's her second time building a bank from scratch. And if you've ever on-ramped a stablecoin through a virtual account, you are probably using Lead Bank behind the scenes. There's no one better to explain the hard truth about payment rails, compliance, and the interplay of banks and on-chain money. But before we dive in, a quick note. Money Code is brought to you by Stablecoin Media and powered by BVNK. The views and opinions of the hosts and guests are their own and may not represent their companies, and nothing we discuss today constitutes investment advice or any other form of advice. Okay, let's dive in. Jackie, so for folks who don't know, what's the story of Lead Bank? What was the specific market gap you were tackling when you got started? And how did it become such a key player in the recent growth of stablecoin payments?
Yeah, well, I appreciated that reference. That, warms my heart and will make our team happy and hopefully our clients. Lead started with a problem, which I think is one of the best ways to build new products. When I was at Block Square, I ran financial services products, and I saw a problem across our ecosystem in that the banking system that sat underneath Square's products was the weakest layer of their infrastructure. And it was a very different era. I mean, remember, this is 2015 when we had this idea to go either buy a bank or start a bank. And so a lot of time has passed and a lot of infrastructure companies have been built since then. But at the time, there was nothing like Lead Bank in the system. And so I set out on a path to go, at first, buy a bank, and that failed. I didn't get very far through the FDIC because they told us we would have to essentially write the application like a de novo charter since it was a new business line. So I ended up sitting there with my team deciding to start a bank and to write the first line of code, the first policy with one of my co-founders at Lead, who worked with me at Square. But we decided we would start it and we would go up against the odds because the industry had never seen anything like what we built. And so I went through a 5-year-long process. And as part of that, we did things like we got really involved with several regulators on going through the process of explaining how algorithmic lending worked and machine learning and AI-driven models worked for underwriting and lending. And so our path took a lot of divergent sidewinds there before we finally got approved. And then when we did get approved, not long thereafter, I left Square and went and bought my own bank. And I did that with 3 folks from Square who also built the bank at Square. And because we had this problem that we understood, and we had 5 years worth of mistakes and learnings, it gave us a vehicle to start something fresh and to rebuild again from the ground up, that we had already gone through this process and had so much insight as a team, from top to bottom, that we were able to apply those 5 years of learnings to building Lead into something that I think is a value add for the industry.
Yeah, that's incredible. I mean, like Chuck said earlier, we know a lot of the infrastructure today and the building blocks is powered by you guys. Maybe walk us through how have you guys earned the trust of both regulators, startups, enterprises. We know that there's a pretty large customer base here, but you guys, even starting from scratch, it takes time to build trust. How have you guys been able to have that domino into the business you guys have today?
Yeah, I think there are a few things. First, I appreciate when you say that. Your comments are very, they make me feel great. I mean, Lead is owned by a group of people, and we care greatly about what we do. I consider what I do a hobby, not work. And I get the benefit of waking up 7 days a week and thinking about my clients and thinking about what we're building and stressing out about regulators. And so I think when you love it as much as I do, and the rest of my colleagues, you put your heart and soul into it. And so I hope our clients and the broader ecosystem feels that. I don't mean to get all Pollyannish and squishy when we're trying to talk about financial services products, but I genuinely feel that. I think on the regulatory side, there are a bunch of dynamics that make Lead unique. One dynamic is that we have automated systems that deal with compliance and anomalies. And that set of systems in and of itself is so unique relative to the rest of the banking system. And it enables us to work with our clients to take a risk appropriate perspective about where real risks are, because in real time we see anomalies based on the behavior of our client set. And so that code enables us to be so much smarter about how we operate with clients, because there's the framework around risk can be checkboxy or it can be substantive. We try to manage around both. If there's checkbox stuff we have to do for we're required to do for regulators, that's fine, we do it. But if we're actually able to calibrate risk around things that really matter versus things that kind of don't matter, and they're an old school function of 1978, well, we focus on the here and now of the complexity of current products versus, some pre-digital form of money issue that somehow got embedded into the regulatory framework. So that's point one. Point two, we have an amazing team. And our legal and compliance team, I think, is second to none. Many of those people come from clients. And so they have the context of what it's like to actually build on the other side of the equation. And because they're builders, they understand what to look out for that really matters. And they know how to help really good companies scale. I think that's the most important thing. There's a difference to being risk on, risk off, versus taking highest quality companies and helping them scale. Because oftentimes I find that those companies lean into compliance because they don't want to have mistakes with their customers' money. They see themselves as those types of dynamics are too consequential for them to make mistakes. And so where we can lean in with good judgment, with product expertise, with automation, and help our clients scale in a regulated way, we have a great partnership with our clients, and our regulators see that as well. The one thing we do with our regulators that I think differentiates us, although I know we're not unique because there are a lot of good players in the industry, we are very proactive in presenting programs and talking about what we do. Even if we see something that we're not doing that we think might be problematic, we go have a discussion with them and we present it. We talk about what we're doing. We talk about mitigants to what we think might make it better. And we go and seek the judgment of our regulatory colleagues because we'd rather catch things early and make sure we have their judgment incorporated into what we're doing. And so I consider us really proactive in working with regulators. We've never had a problem. Like, we are lucky that we have really good relationships. And I think that's built on, addressing our own issues where we see them, addressing our own mistakes, presenting our mistakes, being really honest with things we know, we don't know. And I think that level of transparency and honesty has served us well. I also feel like, we've been involved really early with the Kansas City Fed, DC's innovation teams at the Fed, and then the FDIC, to look at innovative policies around things like red flags in crypto and digital assets. And so we've written a lot of documents in order to help support a broader knowledge set for the industry. And we always volunteer our time for whatever is asked of us in broader committees or innovation events where regulators want to hear a point of view from people pursuing the work and doing it day to day. And I have, presented examples of, redacted red flags, presented examples of where I see problematic issues. I've tried to present themes that I thought were coming, where we see it as a tip of the spear. And I think because we see that and have the dialogue, it makes us better for clients. We're able to address things for clients in a way that I feel enables us to be smarter about their products and maybe in some cases do things that no other bank can do. That was a long answer, but
it's great.
You got the full mouthful.
and I think there's a few things there that I'd love to dig into, but part of the differentiation, as you mentioned, the proactive dialogue with regulators, the modern machine learning and code-based systems for risk management. And as we know, risk management is actually one of the key elements of payments, finance, and banking. And then the combination of working with your clients and making sure that you can see around corners, taking that to the regulators and getting them comfortable. And so those are kind of the properties. What has that enabled you to do? And what are maybe some examples of use cases that you are able to do with that advantage? I think one that comes to mind is the ability to onboard quickly and onboard certain customers that may be too tricky for other banks to onboard.
Absolutely. We had one client in particular that was a very small stablecoin company that we took on a few years ago, and they had been offboarded by a prior bank who chose not to be in the digital asset business. And we took them on with a few employees, and they were learning and building their compliance skills. Now, they happen to be now a multi-billion-dollar, one of the most high-profile stablecoin companies in the world. And they had an amazing attitude towards building a compliance team, building out the functions that needed to evolve in order to have the trust of their customers. They built out a world-class fin crimes team with a leader who worked in treasury and was a military person and was just like an exemplary, high quality, amazing leader. You knew you had the A+ team here with care. And even if they were evolving, we were able to take them on with their evolution because they were willing to do the work alongside of us. And we invested in them because we felt like they had the team that was an A+ team, and they were going to be able to attract A+ players around them. And so, we take on different kinds of clients. We don't only take on huge clients. We take on small folks. They often come through investors we know, or founders or compliance teams that we know. We can't onboard everybody. And so, we're lucky that even with small teams, when we get, a fantastic group of people with a great attitude and they want to go steeply up that compliance learning curve, we lean in and try to do what we can for them.
It's really cool because, as I'm hearing you speak, the common theme I'm hearing is you're bringing that Silicon Valley tech DNA over to building a bank, and you're treating every different piece as a product also. And I think it really shines and showcases that too. And I think it's exciting. And
well,
speaking
everything is, by the way, everything is a product, even our compliance team. One of the dynamics and the reason why I think our compliance team is the best in class, they're amazing, is that their work is front of house, right? They're not cost structure for us. They are front of house, and they are almost like a sales team. We don't have a sales team officially. We have zero sales, but our compliance team is front and center with the world's best fintech, consumer, e-commerce, and crypto companies. That takes a certain kind of person to be able to understand your work, understand the products, defend it, and make suggestions to the best companies in the world in a lot of cases. And you have to be top of your game in order to be on a team like that. And we can hire those people because they showcase the work. They're not hidden underneath as a back office function. So I think that's what makes our team pretty exceptional and interested in working at Lead, is they get those experiences and then they work with good clients. I love our clients. They're pretty rock star. We work with amazing people. And so, it makes you pretty excited when you have good people to work with on the other side as your counterparties. Not everybody, but most of them.
No, I mean, that's awesome. I mean, like, even, you could easily just check the box with compliance or a back office function. But when you think of it as a product, you add that level of rigor, framework, listen to your customers and then iterate on it after, like, that's pretty powerful. So that's exciting. You also,
yes, like compliance as an advantage, like compliance as a value prop in itself.
Well, they are. And the other thing, and we talked about it this year at our all-team offsite in Kansas City a month ago, is we have a philosophy around editing. And so we don't let our internal functions add, they have to edit. So did you ever have a banking experience where every team wants their own documents, their own issues addressed, but there's no cohesive person actually looking at what's required and is it overlapping with just a slight tweak to it every year, and then every year someone adds new stuff. It's frustrating. It's frustrating as all hell. Going back to the first question you asked me, what was the genesis of Lead? The genesis of Lead was this struggle, this customer struggle. Well, when we built Lead, we built the bank we wished we had while we were at Block. And so this is the bank I wanted as a customer. And so our internal team has to edit everything they do. There is no such thing as only adding year after year. And so if we add some stuff, we take away. I actually think regulators should do that, because I think you end up with this regulatory framework. I might say that actually next week when I'm there. But we end up with this regulatory, I don't think I've said that yet. We end up with a regulatory framework that just has added, and there's so much stuff that should be taken away that's no longer relevant. And I feel like it just becomes noise instead of signal. And so I want our compliance team to be really strong signal to our clients to help them scale, not noise, annoyance, frustration, lack of product knowledge. And so that's the way we think about how we run our legal and compliance team.
No, I mean, that's
program management really also.
No, it's awesome. And it's a testament to like what you guys have built today. And, you've obviously had a recent addition as well. You guys have announced an acquisition of a really strong team in the Loop Crypto team. We know Eleni super well, but maybe describe just, the acquisition, like the reason behind it. And it shows that maybe there's more to come from Lead. You guys are not just stopping from, what you have so far as well.
No, not at all. I mean, Eleni and Shane, her co-founder, they're amazing. There are a bunch of dynamics around Lead that matter to us and why we wanted to acquire the company. I mean, first is the team themselves, and second would be particular expertise around what we're building. So first I'd start on the team. They are humble, smart, high raw intelligence, high work ethic, good people. I'd start there. And Lead as a company is very customer centric, innovative, but humble. And we are serious, but we don't take ourselves too seriously. We like to have fun, and we're, like good people interacting with good people. Like, we're not a team of jerks. And so the cohesion around how we get along really matters, because I would like to keep our wonderful company culture evolving in the same way that, in the same path that we're on today, which is just like a wonderful, humble, fun, smart culture. And so I feel like we check that box around the Loop team. And then second, as a skill base, they have incredible expertise around stablecoin payments. And that is obviously something that we've focused on. You've seen us with our client base. You've seen us as we want to be a design partner for Tempo and hopefully evolve more substantively around their chain. And then you've seen us with this M&A deal. These kinds of products are near and dear to our heart.
That's amazing. And I agree with you. I think they are fantastic founders. And just to help people understand the lead bank stack, I don't think the underlyings of a bank is common knowledge to most people. Could you just describe how lead bank is different, what services it provides, the API layer that your customers love?
There's a lot of ways to attack that question. I'll try to keep it podcast friendly because no one wants to look through our architectural stack. We are custom built, designed infrastructure that is built by engineers at Lead from top to bottom. And so our products are in the form of APIs that developers integrate into their own product suite. So our APIs, and 100% of them are custom built at Lead, foundationally. Our APIs are around 5 different types of products. One is stablecoins that we're talking about here. And then there's a broad product suite that goes around that. One is money movement. One is issuing. One is lending. And then the last is accounts. And so that all sounds very banal and very 1990s. But all of that functionality is fairly innovative at its core in both the construction and the logic of how those APIs are built, and then how we deliver it to our clients with a broader set of services that sit on top of the actual automation. And so, on the stablecoin side, for example, you could piece together component primitives in order to create all different kinds of products. And it could be stablecoin reserves on one end, it could be card functionality on another, or it could be spinning up, millions of accounts on the last bit. That's all completely automated systems. And depending on what our end client needs, we'll piece together component primitives to put it together for them so that they have a full suite of banking and financial services products to work with. They then attach it as an engineering team. They then attach it to whatever systems they're using. They're completely integrated with our banking stack, but they're able to deploy it in whatever bespoke ways they'd like to build the customer or business experience that they're focused on.
And so with that, you mentioned stablecoins as a product. You've clearly thought deeply about how it integrates with the product suite. And, as I mentioned at the beginning of this session, the key to kind of the evolution of finance, and banks play a key role. How should bankers in general, and maybe you can talk about the different types of banks that exist in the US, but how should bankers be thinking about stablecoins?
As banks, I think this is a really hard problem. There's 5,000 banks in the United States. Maybe you're talking about 100 of them that, in my mind, have to think about this front and center as it relates to their own payment rails, what payment products they have, how they move money, like the big money center banks, like how they're going to compete in this stack. I think there's a broad swath starting from the bottom on up that are in a very different need set. So let me start at the bottom. We have 4,000 community banks across the United States. And I don't think your audience is at all sympathetic to the community banking system whatsoever. I don't want to put words in your mouth, but it's probably not something they've thought about a lot. And I worry about those 4,000 banks because I frankly worry about the stabilization of the economic system in the United States. So anytime we talk about trillions of dollars going out of the banking system or into stablecoins, it comes out of the banking system. So when the Treasury Secretary mentions $3 trillion in stablecoin assets, assume that comes out, right? And that's out of a roughly $20 trillion banking system. And so I believe that the most vulnerable banks in the United States is where we will see the biggest risk and flight from deposits. And so if you didn't worry about community banks before, roll back to COVID, where we all got very sympathetic to where we were going to cut our hair and what restaurant we'd go into and whether our doctor was going to be local and there was a retail store that would serve us. Like magically, we became super sympathetic to our neighborhood. I worry greatly for the United States that community banks will start to fail across the United States if too rapidly and too greatly money comes out of the banking system. And so I would like to see some ability to stabilize or build product lines so that small banks can actually work cohesively with the stablecoin and digital asset space. Because another thing we could touch on that I greatly believe is that there really shouldn't be and won't be a differentiation between digital assets and non-digital assets. They will all be cohesive rails. You'll just choose one or the other. But we'll pause on that and I'll come back to that if you'd like to. But, you know, you have these banks and I worry that they don't really need stablecoin products right now. And there are two places where I could see them using it, but I would say they don't have the resources to build them themselves. So they need to rely on external providers in order to make this mainstream. One is wallets for customers so that you could manage any type of asset in a wallet, just like you have, you know, dollars today across the banking system. I believe the core providers are going to do that and will make that happen for almost every bank in the United States. Then you have infrastructure. And I think this is an incredible opportunity for infrastructure players in the space to continue to build out their functionality, because I think banks will end up using stablecoin infrastructure, but not because they're having like a woohoo, let's go use stablecoin infrastructure, more because the use case itself will be highly relevant to what they're trying to achieve. And so they're going to choose it because it's useful, not because it's built on stablecoin rails. And so that's how I think smaller banks are going to integrate into the stablecoin space. You know, some of the things I'd love to see happen is that between payments and deposits, current legislation enables small banks, meaning like sub $25 billion in assets, to participate in the market in some way that's positive, so that we don't see this asymmetric flight out of the banking system from old school traditional banking across the United States to big money center banks or to huge money market funds. And the only reason why that worries me is because we have not replaced the velocity of money at a local level across the United States. So I don't know who will do micro small business lending, ag lending, rural lending, across the United States. And I think we're so comfortable that our neighborhoods just work. But someone had to lend that restaurant money to get up and running. So I say that, and I used to have an incredibly arrogant perspective, having built Square Capital. I used to think pre-affiliation with the Kansas City Fed, I used to think, and owning lead at a local level in Kansas City, I used to think that I had been a part of building one of the best products to enable small business lending across the United States. And I think the comparable players to what I had built, Stripe Capital and others, you know, had built this amazing system for small businesses. But the reality is they don't have universal coverage. And local lending is still the velocity of money that moves across a local community. And I don't want to see that go. I don't think we're ready for that yet. So I am hoping that we can find answers that make both the banking system happy and the crypto industry happy, because I don't think they have to be in conflict. I think they can work together in order to do things like where should stablecoin reserves sit, what kind of capital ratios are held against stablecoin reserves, and the types of products that like payment banks across the United States can get involved with.
Absolutely. I think we're incredibly lucky because we're probably talking to the best person who has seen both sides. Having built a small business lender at Square Capital, you know exactly what it takes to reach the small businesses and you know where the gaps are. And I think that's incredibly insightful and helpful for us to think about that. And a few things that you mentioned that I'd like to touch on were getting the opportunities, which were building out infrastructure and getting the software layer there for the banks to interact, but then so that they could do use cases for their customers. What kind of use cases do you think are most likely, over the next couple of years for the community and regional banks, cross-border or domestic or something else?
I think therein lies the biggest conundrum, is that the use cases for banks with $1 billion in assets and less around stablecoins are more limited. And, I was at a Fed event in October, and the CEO of Jonah Bank from Wyoming stood up and asked Vlad Tenev, obviously the CEO of Robinhood, explain where crypto is useful for banks like hers. I believe she had $500 million in assets. And his response was somewhat like, I think, today I'm not sure there's a use case for you. Other than what I said before, which is, there will be wallets built and people will want to have assets that are interchangeable. And then people will build on infrastructure. Unless banks are doing cross-border payments, what operates today in the United States is actually quite functional. And so I'm not sure there is a big use case that I would point to for the sub-billion-dollar banks, which is a huge swath of the U.S. banking system by number, not by asset size. And so that's where I have deep reservations about the stability of community banks to exist over an extended period of time. And I hope we find a runway to build for them, because the moats around accounts, meaning interest-bearing accounts, and the moats around payments, I think are two important moats for those businesses. And I hope they're able to maintain those moats, because I do think we will miss them when they're gone. And in the same way that we, missed our local services when they were gone 5 years ago, in our remote distance, I do think this will have a bigger impact when we want to go to local restaurants that aren't chains. And we're like annoyed that they can't find the capital to start themselves up, or the local insurance company, or the, any of those local manufacturing, because I think we will miss them when they're gone. So, I'd love for people to have use cases. I think right now there aren't any that are apparent. The best use cases for crypto right now are on cross-border payments, where there's an obvious advantage to those that are able to execute more quickly and more cheaply, because they have a new rail that they're building on.
Yeah, and it's a really interesting, I think, observation, Jackie, because so I think oftentimes in the crypto space we talk about debanking or not participating in the banking system, but we oftentimes, I think, in the crypto industry, and I'll speak for myself, it's usually centered towards like the large money center banks, so to speak. But to your point, like sometimes these community banks are the lifeblood of like that city, that town, that region. And so sometimes it's not about just debanking for the sake of debanking, but there's actually a larger, I think, more nuanced point of view here. So like, I appreciate you just sharing that as well. And
it's not like a crypto maximalist point that they're like, go you community bank. But I do remember those post Silvergate signature dinners that we would have, and people were melting over not being integrated into the banking system. But a year prior, they were actually quite hostile to the banking system. And then when they needed them, they totally twisted into a 180 in order to execute against banking requirements. And so that's when I think a lot of the biggest and best players learned about the symbiotic relationship between the two. and why onboarding and offboarding is so important. You know, some of the dynamics around mint and burn activities are so important. And I feel like if people pay attention, we can achieve modern banking rails for the crypto industry while also not cutting the legs off from community banking.
Well, and maybe expand, because you mentioned your point of view on the digital asset side, and actually being symbiotic with the traditional system as well. But maybe expand on that. I mean, I think that's a really powerful piece, and I don't know if you think that also relates to like tokenized deposits in any way as well.
I do. And I think tokenized deposits are a future incarnation of what digital money looks like. So I mentioned earlier that I don't see a distinction between digital and non-digital money, other than the obvious physical manifestation of what cash is, both paper and coins. If you exclude cash, there's so much history with assets evolving from a digital perspective, whether it be ACH from the mid 70s, and wires. These systems might have limitations, and they might be old school in the way that they are used, what they look like, the way the systems operate. But the reality is we've moved a significant portion of the banking system onto digital rails over the last 50 years, thankfully. And now the question is, can we rebuild new rails that use the benefits of programmability in order to really supercharge the evolution of what that infrastructure looks like? And so that's what I'm a believer in. Absolutely do I think that programmability and interoperability will be core to building infrastructure of the future for financial rails. But we will not be distinguishing in the future between what's digital and old school and what's digital and modern, meaning digital assets. We will just have rails that we will be choosing amongst for whatever use case we have that we need at the time. And so we're not going to send everything through a digital asset rail if we don't need to. There might be better, faster, cheaper ways to do it with old school traditional digital methods, where in some use cases it's better and cheaper. And I think the best analog to this would be how money is routed across debit rails. You know, you can choose different rails, and even if you think about a checkout, you choose different payment methods, as another manifestation of it, and it all moves money. It moves money from you to a merchant. And the reality is it could get there so many different ways based on what you're trying to achieve. And we're so good as of today as to thinking what that rail would look like and what the nuances of what each one of them does to a degree. But like even when you're in products like Cash App or Venmo, you don't truly understand the dynamics underneath of like, wait, what is that instant thing? Wait, what is that 1 to 3 day thing? Does that mean that it's going over a different rail? Like 99.99% of people in the world, or maybe I should say everyone but like 1,000 people who truly understand it. And I'm not even sure I'm one of them. You don't really understand which choices that money is taking underneath from an infrastructure point of view. And I think the evolution of digital assets, stablecoins, and then in the future tokenized deposits will be another version of that. I mean, tokenized deposits, I think, has a different use case because it'll be used for banks for within their own systems versus stablecoins, which is to be used interoperably around other systems. And so I think there'll be really cool products being built around tokenized deposits and tokenized everything as we think forward about other primitives within the financial system.
Yes, and I think the interoperability between those two is key to plugging the system together. And I think there is a point there that you mentioned, that people are using lots of different rails and lots of different scenarios, and it's unlikely that the 5,000 bank US financial system will converge on one single rail, given all the legacy and the existing paths that it's taken to get here. And so over time, as folks become start to adopt tokenized deposits and other rails that are more open, at least even within the system, we're likely to see potential for maybe domestic rails on blockchain rails. And I think that just adds complexity, of course, to the entire system. But, practically, the system, the progression of technology is rarely ever just straightforward. It'll be a mix of things. And for certain use cases, they'll choose, the right option. And sometimes that'll be like a fast, instant tokenized deposit. Other times they'll go for FedNow or RTP, and the banks inside who are managing the plumbing will choose what's best.
I think we're probably at the messiest version of what's to come, meaning we're going through an experience of hyperfragmentation as players start to build their own ecosystem, hoping that theirs becomes the de facto platform. And so you have lots of different companies trying to platformize money movement, and no one is quite sure which company, which program, which chain, which structure is going to work. And so I actually feel like we're building infinite complexity right now that requires way too much interoperability, that we're not actually making it easier. But I don't see any alternative to that, because I don't think we can mandate a de facto framework for how it should operate. I don't think that is the way the United States works. And so we're enabling free-form companies to have a Hunger Games kind of platformization of the money system. And I'm all for it, because I think it's unclear what you need for what use case. And so, as we watch the next 5-10 years evolve, I think we'll see a maximalist approach to options. And then a lot of those will end up merging back to some more organized set of players that allow you to have an easy way to move money. And so someone will become more dominant, or some framework, some set of companies. But today there is no dominance across almost any layer of the ecosystem in our infrastructure. So, I think it's a little bit of a Hunger Games free-for-all.
What do you think will determine the winner? What are the key elements?
I think it'll be volume by type of transaction, and people will start moving to chains where you can move a significant amount of volume of money. It's easy, it's programmable, and you're able to actually get your transactions executed quickly, cheaply. And I think there won't just be one. I think different people have so many use cases. People will be both competitor and partner all at the same time, because the stacks that our customers have are so complicated and deal with so many different use cases themselves that I don't see there being a one-size-fits-all version. But we probably will coalesce around a few leaders in different components of the ecosystem, probably 5 years from now.
Yeah, that's fascinating. And it's as you're talking, I'm able to pattern match exactly what you're saying with like conversations I'm having in the ecosystem as well. So it's fascinating. And maybe I guess, Jackie, for you, like, as we're getting close to the end here, but what should we expect from Lead moving forward? I mean, you've provided so much for the infrastructure space, the crypto space, the stablecoin space, even fintechs broadly as well. But what else are we going to see from Lead moving forward?
We are heads down, more of the same. I realize that's not specific, but we're going to continue to build out core banking primitives and make sure that real-time money movement, multinational money movement, core products across banking, as I mentioned earlier, you'll continue to see us build those out and make them better. We have a lot of work to do just to make the whole experience around those products so much better. And then lastly, you'll continue to see us show up across the digital asset space in new products that have never been seen before. And I think that's one of the places where we can excel, because we could deploy the expertise of an amazing product engineering and design team in conjunction with our legal and compliance teams, where we can figure out what can be done, what should be done, and how do we work with really good partners to execute against it. And so you'll continue to see us have more announcements around things that are pretty cutting edge and amazing. I won't preempt any of that, but I am pretty excited about it.
I was hoping you would, but I understand. Okay, and then a couple more questions here as we close out. You're a kind of multi-startup operator in the financial services world, in the tech world. What's one piece of advice you'd give to fellow builders in the financial space?
The piece of advice I would give to builders in the financial space is build for precision and scale. Precision because you can't make mistakes when you're moving people's money. You have to be trustworthy. Like, you have to make sure you understand that moving fast and breaking things doesn't work in financial services. You can move fast, but you cannot break things. You could theoretically, push boundaries, but you're not breaking things when it comes to moving money, or at least I think that would be wildly inappropriate. And so I focus our team on precision. And then as it relates to scale, you want to be able to have redundancy, resiliency, and the capabilities so that you're building for future growth. Financial services is a really complicated industry. It's really hard to pull these products together, and there's so much complexity under the hood with the value chain that's underneath. But when you can build for scale, these products are really powerful, really profitable, and really move the needle on impact in terms of what they can achieve. So that's why I love working in financial services. I think it's amazing when you could build really incredible, big, impactful products.
It is fascinating. There's the complexity makes it so, and at the end of it all, it's real world impact. And then finally, what should we be focusing more on the space? We mentioned earlier community banks.
I think it's always useful when people focus on use cases that actually make a difference. One of my frustrations in crypto is use cases that are not really solving a problem. And there are so many great products out there that are actually amazing that people are building, where when they tell me about what their company does, like, I'm so excited about it. But then there's lots of other companies that we see across the ecosystem, and it's not clear how they actually change what the end game impact would be. So I really hope people center themselves and center their company on, like, what struggle are you solving? What is the pain point that you are solving for? And that, I think, is one of the best things that folks in the early crypto industry can focus on, and that make sure that you are really having an impact and changing the way something gets done.
Absolutely. I feel like I bang on about that every day online. It's all about the job to be done.
Yeah, absolutely. The other piece of advice I would give to people is don't explain your product with so much hyperbole and cliche that it's not clear to anyone what you actually do. I find that with super innovative industries like AI and crypto, that a lot of founders get very caught up in nomenclature that no one else understands. And I believe that if you can explain it to me in the simplest language possible, or if I could explain it to my kids, that I would understand the product better and I'd understand what someone's trying to achieve better. And I know I personally get very frustrated when I don't understand things, and I consider myself knowledgeable enough. But sometimes I sit in meetings and I say, like, I'm not quite sure I understand what your product does. Can we just reverse back into this and explain it to me? And I feel like when you unpack some of these issues and get people talking in normal language, it just makes it easier for everyone. This industry has incredible experts who are really good at what they do, and not everyone is as fluent and native as they are. And so I do think they need to kind of step back and make sure that it can explain it to someone who doesn't live in it 99.99% of the hours of their day.
Yeah, absolutely. Something super important to keep in mind. Jackie, this has been incredible. Really enjoyed this conversation. Where can people go to find out more about you or Lead Bank?
Well, you can go to our website, lead.bank. You can always find me on Twitter or elsewhere, X, sorry. But lead.bank, and call us when you need us.
Perfect. What about you, Raj?
You can find me on X at rparekh and mana.xyz.
And for me, it's stablecoinblueprint.com, on X, Chuk_XYZ, and LinkedIn, Chuk Okpolugo. Thank you so much for joining the show, Jackie.
Thank you. I appreciate it.
This was awesome.
Thanks so much for listening to Money Code. There was so much to take away from today's conversation. I learned a lot, and I hope you did too.
If you enjoyed this episode, do us a favor, share it with someone you know, or give us a 5-star rating on Apple, Spotify, or wherever you get your podcast from. Until next time.